Hey everybody, Kevin here with another podcast episode for you on the Real Estate Without Renters show. I appreciate you listening to the show, and please subscribe and like the show. That way I can continue to bring you some wonderful guests in and around the note investing area. And I have another great one for you today, who I'll introduce in just a moment for you. I want to thank my sponsor, Noteworthy, for this episode as well. We're just coming off fresh from the Noteworthy convention out in Phoenix. In fact, that's where I met our guest, Ted. I'll introduce you in just a second. But a really good event. I think we're probably going to do another one towards the end of this year, perhaps. So I'll keep you posted about that also. And also want to thank PaperStack. Been doing quite a lot of business with them, and always good opportunities for us and my clients to find good deals there, both on the creating notes and also selling notes. And that's going to be a big part of what we're talking about today. So most of my audience is real estate investors who are looking to sell with seller financing, and they have learned to create notes the right way, and also note investors. So stay tuned, because this is going to impact really everybody. I'm excited about this particular topic because I have to say I have never heard of it. And they've been around since 2008 and over 30,000 users. And I feel like, gee, I should have known something about that. So, and it's going to affect, I think, the overall industry. And I'm certainly taking a strong look into it, because there's so many people that want to self-service their notes, and they don't do it the right way. And it really becomes messy down the road when you try to sell a note that wasn't properly handled financially. And servicing companies, professionally licensed companies, simply don't want to take those notes on unless they can get some kind of a notification about, a notice or affidavit, I guess is a proper word of what that note is all about. So we're going to hit this topic today about what is the right way to service notes that you already own. What's the right way to service notes and account for notes that you are creating in your real estate sales as well. So I want to introduce you to Ted. Just didn't I? Tekippe. Sorry about that. Ted Tekippe, and I met him out in Noteworthy, and did a great presentation. And he is the CEO of ZimpleMoney. That's ZIMPLE money.com. You can check that out as well. But Ted, thanks so much for coming on, man. I appreciate it.
Kevin, thank you so much for having me on. It's a pleasure to see you again. Had a great time meeting you out in Scottsdale a few weeks ago. I will echo what you said. The Noteworthy event was spectacular. Great group of folks. Everybody was really approachable. Everybody was, very generous, sharing their knowledge and experience. Great group of sponsors there. We were great, lucky to be one of them.
Mhm.
And just had a really great experience there. So
Yeah. Yeah,
great,
that's
great to
awesome.
see you again, and thanks for having me on.
Yeah, and you have a great niche. And my understanding is, if I remember correctly, you come from a commercial banking background and then decided, well, maybe I can develop something here that will help out family, friends, and other investors to automate their accounting and process for collecting all kinds of different loans, right?
Yeah, that's right. I've been in financial services my whole career. I jokingly say I'm a recovering banker. I've
Mhm.
worked for three different banks along the way. I spent the last, 15, 16 years focused on fintech, so the intersection of technology and financial services.
Mhm.
And I think software has gotten so powerful that it can solve all sorts of different problems for us. I mean, we see that in lots of different ways in our everyday lives. And the problem that ZimpleMoney is really focused on is making servicing notes super simple and easy.
Mhm.
We've got a great, robust but simple solution that's cost effective and makes it easy for people to set up and manage whole portfolios of loans. We
Gotcha.
have automated payments that are integrated into our ledger. So we can set up auto pay just like a traditional mortgage servicer.
Mhm.
We've got borrower portals where they can log in and see their whole transaction history. They can switch payment sources, update their payment methods, payment notifications, all sorts of other good stuff. But I think self-servicing has gotten a bad rap in some corners of the note investor community.
Hmm.
and I think it's really because it's been hard traditionally. People trying to
Yeah.
do this on their own. Setting up an amortization schedule is not that difficult, but there are 100 other things that can go wrong, over the course of managing a loan. Um, and it's really easy to get it wrong, and it's
Yeah.
really easy to get way deep in the weeds, if you're trying to manage it in a spreadsheet.
Yeah,
But
I
we
agree.
make all that easy.
Especially when people pay late, and that's where all the accounting goes just absolutely awry, and I've seen people who've done seller financing. I'm like, you're leaving money on the table because you're not doing this right. You're crediting
Sure.
them for a full amount of principal when they're paying late on this stuff, and you're not doing late fees properly, and it's leaving money on the table. So why don't we break it down like this? Why don't we start with, I think, with a private lender? So visually paint for me a scenario where I'm a private lender. So but I'll just make myself a real estate investor too. So I bought a piece of property,
Mhm.
whatever it is, a single family home, and fixed it up. And now I'm going to sell it, and I'm offering seller financing. So I take 10% down, what have you, and then I create the paper. Is
Mhm.
So where do you start on that? Do you actually have it where you have loans and things built into the system, or they create the paper? If I'm the investor, do I create that paper first, and then I come to you and I start the accounting process?
Yeah, if you're the investor, you create the paper first. So you would actually agree to terms with your borrower or your buyer, and you would want to get that all documented appropriately.
Mhm.
We'd suggest getting the advice of an attorney to do that. There are some other third-party services out there that have templates that investors can use. But we would say start there. Once you agree to terms, then come to ZimpleMoney. And we make it really easy to set up a loan. We've got 10 different loan types, all the different features you could imagine in getting that set up, but it only takes about 10 minutes to get set up.
Yeah, I mean, I saw your demo, and I looked down for a minute, I looked back up, and you're almost wrapping it up. I mean, it was so simple
Yeah.
to get on there and set it up, which is great. You want something that's super easy to do that. So if we slowed that demo down a little bit, it's imagine logging in, username, password, that sort of thing, and then what do? You name the account
Yeah, you
for
give
the
the loan a
borrower.
name. Sometimes that's the property address. Sometimes it's the name of the borrower.
Mhm.
Put in kind of the key terms of the loan. What the term is, how frequently you'll have payments,
So how much
interest
was
rate.
borrowed, what the interest rate is, the
That's
term,
right.
okay, when the
Uh,
payments
we have,
start.
we've got customizable late fees to your comment early on late fees. So you can set your grace period. You can do a flat fee or a percentage of the payment amount. Once you put that information in, you put in the borrower information. So
Mhm.
it can be as simple as just their email address and phone number. But if you have all of their personal information, like their social security number and their physical address and that kind of stuff, you can fill that out for them.
Yeah,
If you
which we
don't,
need,
though,
right? Because I mean, we have to do
yeah,
tax forms. We have to send them a form every year, show them how much they paid in interest. So all the lenders, I'm sure, are getting that social security number. And
yeah.
okay, so we load all that personal information in there. And what I really like too is, you want to get people on an automatic payment, so they can
Mhm.
set that up right in your system, right, through ACH and all that. So the
Yeah,
account
that's
number.
right. So on the personal information part, just to close that off, we
Sure.
actually need that information for BSA AML compliance. We're fully compliant with all
Mhm.
banking regulations. So we
Gotcha.
we screen every person, that comes onto our platform to make sure that they're not, laundering money or, doing terrorist financing or something
Yeah.
untoward like that. But yeah, once you input that personal information, we invite the borrower via email. They accept the terms of the loan, link their bank account, and the first thing we do is prompt them to set up auto pay. So that yeah,
Oh, okay.
that
Okay.
gets auto drafted every month on the date that it's due.
Okay, so we load them into the system, and then the system reaches out to them based on the email that we used, and then the person
Yeah,
logs in and they volunteer that information to put it in there, and
that's right.
that's great because I
It,
can see a lender. If you're coming in and you're offering financing to somebody, you should act like a bank, and you can set the terms and don't be shy about. Look, I only set these loans up on automatic payments.
sure.
And if
Yeah,
a
that's right.
borrower gives you pushback, you gotta think, well, maybe this isn't the right person to lend to then either. Not willing to,
Yeah,
to do that. So I
that's a
think
great point.
it's something that's easy to put right into your presentation when you're offering seller financing to somebody, and you
Mhm.
sell it on the convenience, and you sell it on the fact that this is the way we do the loans. And if they don't
Mhm.
want to comply to that, there might be a reason they don't want to do
Yeah.
that. So I like that. So they
I,
would set that up, and then it's on pretty much autopilot after that, then, or
It's on autopilot after that. And it's a great tool for borrowers too. Because when they accept that loan and they set up their payments, they can log back in anytime. They can see what their payoff amount is. They can see when their next payment is due. They can change their payment source if they open up a new bank account that they want to use instead. And they can be more self-service on their end as well. So they're not constantly calling the lender saying, well, did you get my payment? Or, what do I owe you? Or, can I make an extra payment? They can do all that stuff themselves.
so it's both then. So okay, so the borrower can log in. That's awesome, and then we can obviously log in and see what's going on there as well.
Mhm.
So if an automatic deposit doesn't go through, I'm sure it tries again in a couple days or something, or sends a notice.
Yeah, so we do see some early returns on our platform when we're drafting ACH. Somebody will close their bank account or not have enough money in their bank account.
Mm.
We send out notifications whenever that happens, both to the borrower and the lender,
Okay.
so they can go in and address the problem. We do try to auto redraft, up to 3 times.
Yeah.
But part of our platform is the notifications, right? So everybody has full visibility into what's going on.
Yeah, and the compliance and yeah, it's just the way to just a great way to have that. Okay, so they can go in there if they change accounts, want to change method of payment. Is there other payment methods they can make?
Sure. Yeah. For some contracts, we allow credit or debit card payments as well. So ACH credit and debit.
Okay, so they could do that. They could do that also, and okay, great. So if um if somebody's late on a payment, a late notice goes out as well
Yep.
by email. I'm guessing.
Yeah. Email and SMS text notifications. Whenever a payment is due, we send out a notification. When it's late, and when it passes the grace period, we'll send up to 3 late payment notifications.
Okay.
Um, and on the lender side, you can go in and manage your whole portfolio, see all the different loans if you've got multiple different seller notes that you're managing. You can see at a glance which ones are current, which ones are coming due, which ones are late, how late, if they're 30 days, 60 days, 90 days late. And you might want to start taking action on those. You can see all that at a glance.
Yeah, gotcha. What about escrow? If or for taxes and insurance, does it handle that too?
Yeah, we can escrow taxes and insurance. We can send those funds to a separate account. We're not actually an escrow company, so we don't pay those out, but we can set that up so funds all flow into the account and they're ready to go.
Wow. Hit me with that one more time. So you don't hold it, but the money can be diverted to a company that will hold it, is basically what you said there, right?
That's right. Yeah, yeah. And if you don't already have that set up, we have partners that we're happy to refer you to.
Yeah, I tell people all the time with seller financing, I'm like, don't don't seller finance if there's escrow. I mean, you're in a fiduciary relationship now with that person. You're held to, you can't commingle that money, with
Mhm.
and be in compliance. And you can really get in especially those who have real estate licenses and stuff like that. They know that.
Yeah,
I mean, that's one of the biggest things that happens in the real estate business is the handling of escrow money because it's not your
sure.
money. I mean, you're holding that on behalf of somebody else, and you're obligated to pay those bills when they're due, and it just you can get in a bunch of trouble that way. So this is great. So you can have a separate
Yeah.
account for that,
And
and
and in a
then
lot of states, there's licensing requirements around that too.
yeah,
If you're holding funds in escrow, you've got to have an escrow license to do that.
yeah, for sure. And you know how it is, and there's still a part of this business that's the wild wild west, where people are out of compliance all the time. They have no idea, and it's
Yeah,
never a problem until it becomes a problem, right? And then it
that's
becomes
right.
a big issue on that. Okay, so let's see. So the deal's going through, and the people are automatically paying. And if they continue to pay through the year, then they're going to get a tax form automatically generated showing how much money they've paid and how much of that was interest, so they can do their deduction. Does it do the
Mhm.
accounting on our side, obviously, as well? So the investor.
Yeah, we automatically generate 1098 interest tax forms at the end of every year when the calendar flips over. Those will automatically be available in our portal. And you can see them right next to the section where you can store your note docs too. That's available on our platform as well.
Okay, so that raises the issue of safety. So is this all stored double backed up, or how, what happens?
Yeah, so we use bank grade information security compliance. It's called SOC 2. So we just finished our SOC 2 certification last fall. So yeah, we've completed the standards that are required by every community bank or credit union in the country for their vendors. All the information is stored securely in the cloud on Amazon Web Services. So it's all backed up. We don't have any risk of a server going out and our system going down or anything like that.
Gotcha, gotcha. And what if during the year at some point in time somebody does run into difficulty making the payments?
Mhm.
Um, and we do some kind of a loan mod. I'm assuming the loan modifications, once again, on us, that's the paper side of it. We do our loan modification and then just go in the system and change the numbers. Is that?
Yeah, that's right. So in our platform, you have the flexibility to push out your payment schedule. So if you want to, take a payment that's now, let's say, 90 days past due, push that out to be due in 30 days, and then redo your amortization schedule. You can extend the term of the loan if that's what you want to do. So we've got a lot of
It'll do a
flexibility.
deferment. You can build a deferment in there, even if you put it back to the end of the loan.
That's right. Yeah.
Okay.
Yeah. And you can either choose to extend the term of the loan or keep the term the same with a bigger balloon payment at the end.
Mhm. Mhm. Man, that's really awesome. I just love the automate. We've got a business people today. I mean, it's happening with AI. It's happening with everything else where you can just start to outsource. And the more you automate stuff, I mean, it makes your life so much easier. I mean, geez,
Yeah, absolutely.
do,
Kevin, do
trying
you
to do
see
your own
many?
spreadsheet and stuff like that. You
Yeah.
can't imagine some of the stuff I've seen, and it's just so bad where I have to go, or well, just show me the Zelle payments that came in, or show me the checks that they wrote. Show me at least 6 checks so I know that you're not
Yeah.
just, your handwritten notes here are accurate.
Yeah.
Yeah.
Yeah. So you can export, the full loan ledger, the whole history of the loan, into Excel if you want to, or into a PDF if you're sharing that with, somebody that might be interested in buying the note.
Yeah.
We do note transfers on our platform. If you want to transfer an existing contract to a different user, we can enable that.
Oh, really?
And one other thing that we talked about at Noteworthy that we haven't mentioned yet is co-investing on notes.
Hmm.
So if you have multiple different people that are participating in a loan, we can handle that on our platform too, and automatically do the disbursements amongst different parties.
That's awesome. I have my elite membership where I partner with people. And
Yeah.
PaperStack's one format where I can buy notes and they're set up to do that, which is
Hmm.
great. A lot of the servicing companies, they send me my percentage, they send them their percentage, so you guys can do the same
Yeah.
here.
Yeah.
Um,
The paper stack folks are great. We've been talking to them about a partnership as well.
oh, good, good, yeah, yeah. I trained those guys in the business
Oh,
also,
really?
yeah, many years ago, probably a dozen years ago or so. Yeah, it's a good story. Rick always tells over there, they saw me and they had just started the bit. They didn't know what they were doing, but they learned so much at a 3-day training I did. He said driving home, we did one technique that you showed us, Kevin, and we made 10 grand that day. So
Wow.
that turned them, yeah, yeah. So and they're right here in Central Florida, by the way, too. They're like 4 miles down the road from me right now.
Yeah. Very cool.
Oh yeah, so it's very, very good, and that's important because in this business of buying notes, where I want to kind of switch that. So when you're creating paper, great way to set this up because then again, if you're going to sell that note, if I understood you correctly, so going back to my scenario, I'm the real estate guy. I bought the property, I sold it with financing, I took the paper, and now maybe a year's gone by. I've
Mhm.
collected my payments, and now I want to sell that note to somebody else. If that somebody else joins your platform or is already on your platform, that can transfer within the
Mhm.
system then. Oh man, I like
That's
that.
absolutely right. And the borrower doesn't have to do anything different, right? Like
Oh
their
man,
auto pay just keeps on paying.
I like
Um,
that. Oh
and
man.
and if the buyer of the note wants to use a different service, like if they have a third party servicer that they
Yeah.
prefer to use, you can mark the note as sold in our platform, and it's closed from our servicing side.
Gotcha. Okay.
Easy to do that
So
too.
now coming in at my favorite, where I'm a note investor, and
Hmm.
that's really the bulk of my business, and I buy notes that are already existing. So if like I said, if it's on the platform, I get that. So I can buy the note, have it transferred. Because you never, if a borrower is already having auto debit payments, you never want to disrupt that. It's just
Sure.
foolish too. You would want to go just keep them happy. When
Don't rock the boat,
account,
right?
there's no disruption of that income stream, and that's what we want. So I get that. So a different scenario though would be I buy a note outside, and it's not being serviced by
Mhm.
ZimpleMoney. And I buy this note, and scenario one, it's somebody who we just bought one, so I'll use this one as an example. It's a vacant land, a piece of land, and the person put like 23% down. They carried back took back a note, and we bought it after the first payment was made. So very light seasoning, if you will, just one payment made. But
Sure.
we bought that note. So she hadn't, even the note seller hadn't boarded it or anything like that. I mean, she was looking to sell it right away. So she collected the one payment, which they mailed to her, and that was that. So now we have that note. Um, we could then go to your platform and just load up the info, like you said before, almost like
Mhm.
it's very similar, I'm guessing, to creating a note, which is we just put the basic information and get them started in the process, right? Is there any real difference or
Yeah,
anything that, or is
that's
that?
right. In that scenario, you could do one of two different things. The most common is you would set up that loan in our platform as though you were setting it up as a new loan, and then you can reflect any transaction history that's already happened by making manual entries and marking off payments that have already been made. That's probably the most common thing that people do. Sometimes people will board it like as of the day that they buy it, and they sort of ignore the history that happened before. But most of the time, we see the first scenario. And by the way, Kevin, if you are boarding loans onto our platform that have already been in repayment, if you've got a whole bunch of them that you want to upload, we offer portfolio migration services, so we could board all of those for you. We also just published public APIs. So if you want to give us a big spreadsheet of 100 or 200 or 1,000 loans, we can board all of those into our platform using our APIs. Yeah, in minutes or hours at the most.
Mhm. So I'm trying to figure out on the licensing issue, right? So how many notes can somebody do um, where they're self-servicing it? Is there any limitation on that? Um,
It,
and is
it's
there
funny
any
that
licensing type of requirements, or is the license, if there are requirements, are they held with you? In other words, I guess part of my brain is like, well, if this is automated and I can have more control over it myself and your prices are very reasonable, why would I board it with a professional servicing company if I can do it myself? So I know I threw
that's
a
a
lot
great
of
question.
questions at you, but that's kind of where I'm thinking.
That's a great question. I mean, I think a lot of people are comfortable doing business the way that they've done it for a long time, and I think that using a third-party servicer makes a lot of sense in some scenarios, and it's sort of the inertia of the way people have done business for a long time. But there's no legal reason or technical reason why you couldn't self-service as many notes as you want. There's a common misperception that if you have more than three loans or more than five loans, you need to use a third party servicer. That's not true. It's not part of Dodd-Frank. What Dodd-Frank says is that you have to follow certain rules if you have certain, more than five loans that you're originating in a year. But that doesn't have anything to do with where you service those loans. You got to follow those rules one way or another.
Yeah, and CFPB, I think, it might be dissolved, as we speak.
CFP
But
who?
yeah, so that had a lot of hoops to go through, and some of it was obviously foolishly written. I mean, seller financing your own home was illegal for a period of time until they fixed that little
Yeah.
thing. So I think a lot of those regulations are going to go away. Now there still are some things though that, like when we buy a loan and there's a new owner of the loan, a federal required letter has to go out. When
Mhm.
and the hello goodbye letter, if you're switching service companies, and the TILA
Mhm.
303 and all that sort of stuff, is that built in, or is that still the responsibility of us before boarding it with you?
Yeah, that's still your responsibility. That
Okay.
that part's not built into
All
our
right.
platform.
So we still have to be aware of some of the the issues and doing that just to be in compliance. And again, I know plenty of lenders don't do that, but it is something that's
Yeah.
required. And we always have to look at worst case scenario, and worst case scenario is these mistakes that you make in the dealing with the loan in the beginning of the loan. Again, as long as everybody's paying, nothing will ever come up. It's when they stop paying,
Yeah.
try to foreclose, when their attorney's going to go back and go, oh, you never sent this, you never did that. And you might still
Yeah.
win the foreclosure case, but they're going to make it longer and more difficult, more costly for you to,
Yeah.
to do it. So we want to be, compliant as we possibly can.
Yeah.
So what is the difference then between, you know, one of the servicing companies that everybody's familiar with in the industry? What would be the difference, would you say, between boarding it with that servicing company and self-boarding it with your service?
Well, I think if you send it to a third-party servicer, they will set up the loan, they'll contact the borrower, they'll manage repayments and all of those other things. So our platform is a little bit more hands-on. Like you're the one who's actually setting it up, and you're the one who's communicating with the borrower directly. It's really a technology platform and a money movement platform and a great tool for folks that want to do it themselves versus an outsourced service model where you're sort of tossing it over the wall and saying, all right, take care of it for me.
Yeah.
Yeah. So I mean, there's pros and cons to either model, but
Yeah.
if you want to have your hands on it and have control, we're a great platform for that.
Yeah. I could, and so really what's happened over time is we still call them servicing companies, but they're really not just servicing, because servicing alone is exactly what you have. It's
Mhm.
collecting the payments, accounting for the payments, the taxes that's what servicing really is. But
Mhm.
today's servicing companies offer the workout solutions,
Yeah,
where they're
that's right.
sending the late notices and they're making the phone calls and that's that sort of thing.
Mhm.
So that would be probably the biggest distinction there, which
Yeah, that's right.
if you want to be more hands off and have somebody else do that, you pay them, and that's why we see servicing fees. Some people that are new, they have a note that's performing, then it goes bad, and the fees go up. And they're like, my
Yeah,
fees went up, and I'm not collecting any money. I'm like, well, the fees have gone up because now they have to actively try to collect.
right.
It's more employee hours and that sort of stuff. So
Yeah.
from that perspective, it makes a lot of sense. But I also know that there's plenty of times that you buy these little short-term loans that have been seller financing themselves, and I think those are perfect for something like this.
Mhm.
That I've had plenty of people. There's like 3 years left on the loan, and the person's been paying for 10 years. I'm like, self-service this one, and if they have any problems, then yeah, maybe you have to send a letter, but you could always deboard and go bring it to a workout company later on if
Mhm.
you didn't want to deal with
Yeah, that's right.
so
Yeah.
the ideal notes for this one are ones that are solid performers, right? I mean,
Yeah.
that's just perfect. But yeah, if you want workout services, and certainly if you're buying non-performing loans, more than likely you want to have somebody else handle it.
Mhm.
But again, I don't know anybody who gets in the
Yeah.
note investing business like, oh boy, I can't wait to call delinquent borrowers, and try to collect money. It's like, no, nobody gets into this business for that.
Yeah.
You want to outsource that, to
Yeah.
somebody, and that makes a lot of sense to, you know.
Hey, Kevin, the one other thing that I'll mention that we're doing with a mutual friend of ours, Dan, he's using this to manage repayments to his investors, people that are, lending him money that he's then re-lending. So that's another useful tool in the note investing community. If you're
Gotcha.
borrowing money to re-lend it, this can be a great tool for that too.
Gotcha. Yeah, that's a great idea. So yeah, if you're borrowing money and utilizing other people's money to buy these notes, you could set it up through that system. I hadn't thought of that. I just interviewed Dan. He's talking about Dan Deppen, right? Uh, right?
No, different Dan, but
Oh,
but
different
Dan
Dan.
Devin's a
Oh,
great guy
Dan
too.
Z. I gotcha. Yeah.
Yeah, Dan.
Yeah, Dan Z. In fact, I just got it's weird. I got an email from, I guess he posted something on Facebook. It just popped in. But funny how that works. Okay, so the other Dan, I gotcha.
Yeah.
Yeah, that's a great idea, because there's other types of loans too. So what other loans above and beyond notes, just so people are aware?
So the other big category we do outside of the note investing community is businesses that offer customer financing. So if you are, let's say, a contractor and you want to, offer somebody financing for a remodel, or you're a roofer and you want to offer customer financing for a portion of the new roof that they've got to put on, we've got a lot of those folks too. And those guys used to do it running around chasing down a check and keeping track of it in the notebook, and we make it really easy to set those up and service those too.
Gotcha. So really any kind of IOU, basically, any kind of
Yeah,
note.
any kind of private party loan, right? Doesn't have to be collateralized by real estate.
Yeah. Yeah. Get that cousin that you lent money to on
Sure,
a
we've all got one of those cousins, or have been one of those cousins at some point.
Yeah, exactly. Exactly. No, that's great. And I mentioned your fees are reasonable, but lay us out the different plans that you got.
Sure. So we have three different monthly subscription plans depending on how many loans you have. If you have 1 to 3 loans, you can be on our cheapest plan. It's called the primary plan. It's $23 a month. The middle tier one, I think, is $43 a month, and the high $47 a month, and the highest one is 77. 77, you can have unlimited loans, right? If you've got 100 loans, you can do that. We do charge transaction fees when we're processing payments.
Sure.
And we charge a one-time loan setup fee when somebody boards a new loan. We also enable lenders to pass those fees onto the borrowers. So you can charge a borrower a loan setup fee. You can charge them a monthly servicing fee, and you can basically recoup all of those costs, or even add a little bit of revenue to your loan stream.
Okay. All right. Very good. And they can get more information at ZimpleMoney. Again, that's ZIMPLE money.com. And on the site, I know you've got different videos and things like that, but they could also, if they want to see a demo, is that something on the site, or is that something they contact you about?
We've got videos on the website that show little snippets of that, but yeah, we're happy to set up a demo, and we do those all day long for customers.
Yeah, and they can go to the website and find the link there for all of that. And I think the website really breaks down also all the different types of loans. I mean, obviously on this, I want to focus on the lending and the note buying.
Sure.
Because I just think it's a great way to go. I love the automation and that sort of thing. And as you said, there's certain notes that you probably don't want to do, because you want to outsource that workout stuff. But there's definitely a category of notes, but that note buyers would do, and lenders, especially the lenders today. One of the most popular models is what I just kind of created in our example was real estate investor creating paper, because when they do that, they don't want to hold on to that paper too long. They want to sell that paper off, and they're getting much smarter. And I hope I had a lot of influence in that, because I started teaching to these real estate investors. I'm like, you guys are creating garbage notes, and then you wonder why the discounts are so big. I'm like, because you're not tracking them properly. You haven't done this properly. It's like, I have to point out all the mistakes that they've made in creating, let alone servicing it. And if they did a better job of that, then they all of a sudden they don't have the same type of discounts that they have. And I could see there, for example, sometimes I tell them create 2 notes, create a first and a second. And that would be another great way to do it. You sell the first, that note could be transferred, right in the system, and you carry back the second on there, and collect that money. And yeah, so I think there's a definite need on that, and I'm looking forward to it and seeing more and more about this, and sharing the word, my friend, because it's a great service.
Well, Kevin, one thing that you have done a great job at, and I commend you for, is helping educate folks that are getting started in the industry on how to do it right, how to set up notes right, so they're not leaving money on the table when it comes time to sell those notes, and they don't run into problems, if they do find themselves in a delinquent situation. So, kudos to you. Thanks so much for everything you do for the industry. Really appreciate it, and really appreciate you, helping spread the word about ZimpleMoney.
Yeah, I think it's great, and thanks for being on the show, Ted. I really do appreciate it, and I'll be talking to you real soon. So thanks everybody. Hope you enjoyed this episode, and of course, as always, if you want to get in touch with me, just go to info at kevinshortle.com, and remember that's SHORTLE.com, and I'll be glad to get back for you. Have any input on who you'd like us to have on the show or topics that you want to cover, just let me know that as well. But please like and subscribe. It does really help. I want to be able to continue to build this podcast for you. And don't forget, I also do rebroadcast on YouTube as well. So you're welcome to watch the full video rather than just the audio if you would like as well. So until next time, thanks everybody for tuning in, and have a great rest of your day, and talk to you soon.